Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Happy Monday. Welcome to Modern Investing Techniques, episode 62. It's June 1st, 2026, and I'm Patrick in Vancouver. New week. Let's see what opportunities the markets are presenting. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian steel names could see fresh defense demand after Hanwha selected Algoma material for armored vehicles built in Canada. Markets opened mixed with the S&P 500 at 7,581, flat. The NASDAQ Composite sat at 27,018, up 0.2%. The TSX Composite was at 34,677, down 0.3%. Oil climbed on renewed Iran tensions while U.S. equities held near records. Our simulated portfolio sits at year-to-date plus 1.44% versus the NASDAQ year-to-date plus 16.28%, leaving alpha at negative 14.84% year-to-date. 16 days after the APO insurance float entry closed negative 1.81%. The position reminds us that even attractive valuations need sustained catalysts to outperform the benchmark. With the benchmark gap clear, let's look at a strategy that sidesteps exploration risk entirely. Royalty acquisitions let investors capture cash flow exposure to operating mines without funding exploration or development risk. Summit Royalties just closed a 1% net smelter return on Newmont's Saddle North deposit for 5 million Canadian dollars in shares, giving direct participation in future production at a fixed cost. This structure works best when the underlying asset has proven reserves and the royalty holder maintains low overhead. Investors can screen TSX Venture royalty companies using free cash flow yield and reserve life metrics on platforms like TMX Money or stockanalysis.com. The approach historically shines in rising commodity cycles, but carries single asset concentration risk if the mine underperforms. Position sizing below 5% of a TFSA portfolio limits drawdown if metal prices stall. Royalties reward discipline. Now let's apply similar discipline inside your TFSA. Imagine you bought a high-growth Canadian tech name last week inside your TFSA, expecting 25% annual returns. Your order filled cleanly, yet the real edge comes from understanding that every dollar of growth compounds completely tax-free, while the same holding in a taxable account would lose 26.5% to capital gains tax on exit. The mechanism is straightforward. Contribution room resets every January 1st. An unused room carries forward indefinitely, but over-contributions trigger a 1% per month penalty that can erase months of gains on even a $5,000 mistake. Professionals always check their CRA My Account balance before any large purchase and keep a running adjusted cost-based spreadsheet to avoid superficial loss traps on re-entries. The biggest mistake with TFSAs is parking only low-yield GICs inside them, while high-growth assets sit in taxable accounts. Instead, always allocate the highest expected return holdings to the TFSA first, then use the remaining room for income-producing names that would otherwise trigger withholding taxes on U.S. dividends. That TFSA edge pairs well with today's momentum catalyst. This is a simulated trade for educational purposes only. No real money is involved. Today's practice investment is a weekly hold on NVIDIA Corporation. The catalyst is NVIDIA's new ARM-based chip, debuting in laptops from Microsoft, Dell, HP, and others, marking first direct entry into the PC market. The technical setup shows the stock trading above the 50-day and 200-day moving averages, with volume expected to exceed the 20-day average on the announcement. Nearest support sits near recent swing lows, and we set a hard stop loss at 6% below entry. The target is plus 4% to plus 8% over the week if PC ecosystem adoption news continues. Confidence is medium because the product catalyst and sector leadership align, yet broader market rotation adds uncertainty. This trade demonstrates how to size a position around a single product cycle catalyst while maintaining a hard stop. While we wait on NVDA, here's how yesterday's flash trade performed. Yesterday's flash trade was SNON entered at $237 at market open and exited at $239.20 at market close. The position gained 0.93% for a $9.28 profit on a $1,000 simulated stake. That delivered plus 0.73% alpha versus the NASDAQ over the same one-day window. The modest single-day move confirmed the partnership catalyst worked, but also showed how quickly momentum stalls without follow-through volume. The rule extracted is to always require volume confirmation above the 20-day average before entering momentum trades on partnership announcements. Volume discipline matters. Here are the tools that help enforce it. TMX Money Royalty Screener filters TSX venture royalty and streaming companies by net smelter return yield, reserve life, and operator quality so investors can quickly rank opportunities, like the Summit deal without manual spreadsheet work. It is available free on the TMX website under Company Research, with premium tiers adding export and alert features. Wealthsimple Trade Options Chain View displays 30-day covered call premiums and implied volatility for any Canadian or U.S. name held in a TFSA, letting users calculate annualized yield before committing capital. It is free for all Wealthsimple clients with no extra subscription required. While you explore those screens, here are 4 quick items worth watching. Frontera Energy closed a $750 million Colombian asset sale to Parex, removing exploration risk from the balance sheet and delivering immediate cash plus assumed debt relief. Add PXT to your watch list for potential re-rating once proceeds are deployed. Apotex filed for a $1 billion IPO as Canada's largest generic drug maker seeks a public listing that would create a new large-cap healthcare name on the TSX. Review the Apotex prospectus for TFSA eligibility once trading begins and compare valuation to peers. Motorola is acquiring Defend for $1.5 billion, expanding counter-drone technology into critical infrastructure and government markets. Add MSI to your sector ETF watch list for potential defense tech rotation exposure. Canadian manufacturing expanded for a second month as May PMI data showed growth tied to war-related stockpiling, lifting demand for domestic factories. Review Canadian industrials exposure in XIC or XIU for any rebalancing needed after today's TSX dip. Our simulated portfolio has completed 29 trades with a 62% win rate, 18 wins, 10 losses, and 1 break-even. Cumulative profit and loss stands at $416.37, with an average return per trade of plus 1.44%. The best trade reached plus 20.11%, and the worst reached negative 11.35%, leaving a current streak of 2 wins. Our AI analysis is learning from volume confirmation patterns and adjusting position sizing on catalyst-driven entries accordingly. Before we wrap, open your brokerage app, search Summit Royalties, and pull up the Saddle North royalty details. Note the $5 million Canadian acquisition cost, and calculate what 1% of expected annual production revenue would need to be to deliver a 12% yield on that outlay. I've got my eye on defense sector rotation signals for tomorrow's quick hits. Stay tuned. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Unintended Consequences a listen, true stories of good intentions that backfired. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the